Have you noticed something strange lately? Everywhere you look, Twitter, YouTube, news channels, people are talking about fear. The tech bubble is bursting. AI stock will crash. This is 2000 all over again. But here is a psychological truth about markets. Crash don't happen when everyone is scared. It happens when everyone is confident. And right now, no one is confident. When we talk about real bubble, we are not talking about fear. We are talking about euphoria. Look at the data from .com era. The Nasdaq shot up from 743 in 1995 to over 548 by March 2000. That's 580% rise in just 5 years. Companies were worth billions despite barely having revenue. In 1999 to 2000, more than 10% of total market value came from companies trading at price to sales ratio above 25. That's not optimism, that's delusion. That's what a true bubble looks like. And then the bubble burst. The Nasdaq collapsed from 5048 to 1139 by 2002. A fall of over 75%. More than $5 trillion in market value disappeared. It took Nasdaq almost 15 years. Yes, 15 years to return to its 2000 peak. That's what a real bubble burst looked like. People weren't scared before it. They were overconfident. Now compare that to today. We don't see euphoria. We see fear. Everyone is hedging. Retail participation is low. Investors are cautious. Analysts are cutting targets, not raising them. Yes, some AI stocks are expensive. Some may correct 20 to 40%. But the broader tech market, forward PE ratios are about 36% above long-term averages, not 300% or 500%. Cloud, cybersecurity, SaaS, many of them are trading near multi-year lows. This is not 1999 behavior. This is classic fear-driven correction behavior. Here is something most people don't realize. Historically, when behavior sentiments hits extreme negativity, the next 12 to 18 months often produce above average returns. Why? Because bad news gets priced in early. Expectations fall. Companies easily beat lowered expectations and the sentiment flips very quickly. This means the market often rebounds before things start looking good. Negativity feels scary, but it is often the birthplace of opportunity. The market doesn't need magic. It just needs one catalyst. First, interest rate cut. AI spending turning into real profits. Strong quarterly earnings. Geopolitical stability. Better inflation numbers. Just one of these is enough to change the entire tone of the market. Fear builds slowly, but recoveries, they happen suddenly. So, is the tech bubble about to burst? Looking at psychology, history, and data, very unlikely. When everyone expects a crash, when fear dominates every headline, when people are preparing for the worst, that's usually not when crash happens. That's when the bottom forms. This is not the time to panic. This is the time to think clearly. If this helped you see the market more clearly, hit like, subscribe, and share this with someone who feels anxious about investing right now. This is AT, and on this channel, I use data, history, and psychology to help you make smarter financial decisions.